Hi guys, we are here again to discuss about mortgage. So Melissa, we have been hearing about a lot of assumptions about assumable loans. Tell us which loan are assumable.
Okay, so yes, this does come up a lot because there's so many people that have homes to sell with interest rates that are really low. So in the 2s or 3s or even 4% sounds incredibly low these days. The loans that are assumable are going to be loans that are FHA and VA loans.
Okay. Is conventional assumable?
Sadly, no. So no.
Why is that?
So it's just the way the loans are written. The only people that can assume a conventional loan, this is actually really good to know, are people who are like separating, so divorce or separation,
Right.
Or death. So
Right.
it has to be a family member, like who was on title to begin with.
Okay.
So another thing that comes up with conventional loans a lot are investors who are transferring their title to an LLC, and a lot of times they'll think that that's an assumption, and it actually is not. So that is allowed by Fannie Mae and Freddie Mac since about 2016, I think is the date. That has been allowed, and the logic behind that is that the owner of the LLC is the same person as the person that bought the house. So yes, it's going from the individual to the LLC, but it's still the same person that owns it.
Okay. So in that case, it can happen.
Yeah, and it's really not an assumption.
Oh, exactly.
Yeah.
Yes. Is FHA assumable? And if so, what are the criteria for that? Okay,
so basically on an FHA and a VA loan, the person buying the house just has to be approved for the loan.
Okay.
So they do go through a qualification process, but they're working with the assumptions department, which is part of the servicing department, not the sales department.
Right.
So let's say someone wanted to buy a house that had a guild mortgage. They would not call me, or if they did call me, all I could do is say, here's the information for the assumptions department. Those departments are not used to doing those loans because nobody talked about assumptions in years and years and years. And now all of a sudden people are wanting to do them. So they don't, this might sound mean, but they don't run terribly efficiently. So
I don't blame them.
Right. They just don't do it all the time. But what it's important for a seller to find out early on is for them to call their servicer if they want to offer an assumable loan and find out what exactly are the requirements, and then also how long is it going to take.
Okay.
So if it's going to take 4 months, if they're okay with it taking 4 months, then great. List it, market it. They can offer that buyer a way lower payment because they have such a low interest rate.
Right.
Now, the other thing is that the buyer has to come up with the difference between the seller's mortgage and the purchase price. So usually the people that can take advantage of these loans are people who are conventional buyers who have a lot of, they were going to put 30% down anyway, or 40%. Right. So it'll work for those people. It will not work for somebody who wants to buy, but they only have 3.5%.
Right, because they have to probably qualify for the entire amount of the loan.
They're qualifying for
at just the current rate,
the remaining loan. So that piece is easy. It's coming up with the cash difference.
Okay.
So that's some lenders will allow a second lien, but you have to find that out. Will this servicer allow that? And then finding a second lien holder that will do a second lien behind an FHA or VA loan. And I think most of the time those companies will go to a maximum of 90% loan to value.
Right. Okay. So now let's FHA is assumable by any person.
Yes.
How about VA loans? Can non-VA person assume the VA loan?
Super good question. Sometimes is the answer. And it depends on the servicing company.
Okay.
So some servicers will allow a non-veteran, some will not. Now, if it's a non-veteran buying the home and assuming the loan, then the veteran's entitlement gets tied up in that home. So it stays with the home. Now, if the balance on that loan is $250,000, they would still roughly have enough entitlement to do a $500,000 loan. So and those are very rough numbers, but it doesn't mean they can't do another VA loan. But if their loan was $500,000, now they're very limited because the total entitlement will only get them to $750,000 currently. Now, if a veteran is assuming the loan, then that veteran can use their entitlement for
Yes.
that loan, and then the seller's veteran's entitlement is protected or
Right.
retained.
Okay,
So
that's good to know.
Yeah.
So, why would someone would want to assume FHA since it has the mortgage insurance fees?
that's a good question, and really it's the interest rate.
Okay.
So if the interest rate is low enough, the fact that they're paying the mortgage insurance still makes sense, because their payment might be several $100s less per month by assuming that FHA loan, paying the mortgage insurance versus paying a 7.5% interest rate on a conventional loan.
Got
So
it.
that's why it does make sense.
Of course, yes.
Yeah.
Interest rate is everything is about the rate, right?
Yes.
What are the pros and cons about assuming the loans?
So I think the biggest pro is obviously the interest rates. They're low, and I think that's appealing to buyers because affordability is our biggest challenge right now.
Yeah.
And it can also be a pro for the seller because they might get more interest in their home because that interest rate is so low and the payment would be so low. The downside is the time it takes. So someone has to be willing to, both the buyer and the seller have to be willing to wait out that process. And then also just the minutia of what are the actual requirements going to be for that servicer, because they do differ a little bit.
Right.
The FHA and VA have their rules, but then the servicers can have rules on top of that.
So average, how many days or months it takes? Average, anywhere from 30 to 60 days, 30 to 40 days, you don't know.
4 months.
4 months. Wow.
3 to 4 months. Yeah.
Wow.
3 to 4 months. Yeah. That's a while.
Yeah.
So
Someone
it's not
has
going
to
to happen fast.
Right. Okay. That's good to know.
All right. I know this is a lot of information, but if you have any more questions about whether an assumable loan might make sense, reach out. We'd love to help.
Check out the information right below.
Thanks.
Bye. Thank you.